Welcome back to another trade recap. Same session as the last video, if you saw that video. So just gonna quickly go over this trade. I believe this is my second trade coming off of that trade there. I'm on a oddly interesting winning streak here. But yeah, so after that last trade that was in the last video, this is the second trade, or third trade technically, that I'm getting off of this one. So we're just gonna quickly go through this and walk through my thought process essentially. If you hear a weird sound in the background, please ignore it. My computer's like wigging out, bro. I don't know why. I think I need to restart the computer, but anyways, so starting on the daily chart, as you can see, if you watched the last video, we had a C2 candle put in. We took this low here. It's hard to see, but we did take this low here on NASDAQ, and then we had a expansion candle here. And then if you look on ES, we put in a C2 candle, which is a reversal signal. We expanded and then expanded. But if you also take into account the weekly profile, this is a Monday right here. This is an SMT at the bottom because Monday's candle never took Friday's candle. But if you look here, Monday's candle took Friday's candle. So that's a sweep with so that would be an SMT at the lows here. So my thesis is that this candle right here is our weekly low. So this is the low of the week essentially. So then going into Tuesday, we expanded. So I'm already expecting Monday to expand. Wednesday to be an expansion candle as well. So I was definitely going in very bullish, and our long-term, I guess I already have it there. So our long-term draw on liquidity would be up here unless, proven otherwise. So that is what I'm going in with from the daily chart. Just looking at the daily chart, that's my bias, bullish. So then I go down to the 4-hour chart, and then I mark out my 800 candle, which is right here, and then I mark out my 6 o'clock candle on both charts. As you can see here, I mark them out, delineated by this blue line here, and then I just take note of, okay, have we maybe put in a relevant low of day? On this case, a very rare case, I might add, we actually did, because as you can see here on this 2 o'clock candle, we came down, we respected this fair value gap, but I think more importantly noted is that if you look on ES, we took this low, putting in an SMT, so that is a relevant low of day. So my thinking is that this is the low of day. So if we want to be bullish, we want to trade away from the low of day. So yeah, that's basically what I noticed on the 4-hour, and that's basically it. We have these confluences such as this SMT right here. We have a PSP as well, and a relevant low of day that we want to trade away from, supporting my bullish bias that I determined from the daily chart. So then if we come down now to the 1-hour chart, what else is supporting said bias? Well, right now, coming into the 9:30 open or the 9:30 driver, we are respecting this bullish fair value gap. Now, if I want to continue to be bullish, I want to see this fair value gap hold, and help support price or sponsor price to the upside. Now, if we were to invalidate this fair value gap, in other words, if we were to close below this fair value gap, then I would probably either flip my bias or not take a trade. It really just depends. Because if we invalidate this bullish fair value gap, then that's telling me that that is not what we're doing right now. That is not what price wants to do right now, and we are probably going to the downside. But in this case, we actually were supported up by this fair value gap, and the driver did deliver in the direction that we were expecting, which is bullish. So then I just go down to the 15-minute. I kind of wait for a sweep of some sort. We did get a sweep. As you can see, we swept this out. Now, do we have a fair SMT of some sort? I don't believe we had an SMT. We did not, but we did have a PSP delineated by this blue line right here. I'm guessing that I delineated that on the 3-minute. But we did not have an SMT, but we did have a sweep, and we did have a PSP. So all I was waiting for now was a change in state of delivery, which, if we go down to the 3-minute, is shown. So actually, we didn't actually have a change in state of delivery. I actually entered early on this, and I'm going to tell you why. So essentially NASDAQ was the one to put in this SMT. So I don't want to start trading bullish until I see NASDAQ, the asset to put in the SMT, start to switch strengths and move to the upside. So it actually started to switch strength and started moving to the upside. But if you look here on ES, which is technically the asset we want to trade bullish on anyway, just because it is our stronger asset, we did have a order block put in here that, you know, I would want to see support price to the upside. And our draw on liquidity was Asia highs. However, I also used my standard deviation to determine where we could possibly go. And my standard deviation was telling us that we could definitely see these areas past this high here, just if anchoring my standard deviation or my Fibonacci to the low of this candle here and to the high of this, which kind of delineates the range of this order block here. So I basically took this into account, put my stop here, I entered where the candle was, and I just let it rip to my TP. Now, you could have potentially also taken this on NASDAQ, although I do think the better asset to take was definitely ES. So if you wanted to take a trade here on basically NASDAQ, you would have waited for this inverse fair value gap. If you want to trade with inverse fair value gaps, fair value gaps are not really a part of this system, but I have used them in the past and I do know how to use them. So we closed above the inverse fair value gap. That means now this is invalidation. This is basically a change in state of delivery, or basically a strength switch. So this is telling me that we are not respecting bearish order flow anymore and we are switching to a bullish order flow. So once we close over here, we could actually look to get in potentially typically you would actually want to set your entry if you're waiting for the retrace at the inverse, but sometimes price might just rip and leave you behind. So maybe we want to enter here at this candle and set our lows maybe to the bodies of this candle, and then just target 1 to 2, which funnily enough is actually near these highs here. You could probably just set it right there. Now, if you wanted to use the Fibonacci standard deviation to try and get a projection, you could also anchor your stop, your Fibonacci to this low, to this high. And you're wondering, why this low? Well, this low is the low that technically starts this bullish expansion, but not only that, if we use this low here, because we can anchor it to this high, so you want to go from right to left, right, and just anchor it here. You could also do this to here, but I do think that because this is our most recent swing point, that this makes the most sense. As you can see, standard deviation has been met here. We could possibly try and get up here. So let's see if it does get there, and it does. So that would be your 1 to 2 right there. And in fact, it does actually get up to our maximum standard deviation, but I only need 1 to 2. So, but a 1 to 3 would have been nice as well. So yeah. And that's basically that. Yeah, that's basically it. I'm loving these colors, by the way. I'm really loving the new chart theme that I have going on here. It's really pretty, really calming, really nice, and I feel like it's, in a weird way, has made my trading a little bit better. Which, chart colors have nothing to do with making your trading better, but maybe it puts me in a better mood. I don't know. With that being said, that's all I have to share here. I hope you learned something. If you have any questions, let me know. Don't forget to like and subscribe, and I will see you in the next one. Peace.